Good morning, friends. Welcome back to the 46th episode of Pre-Market Trip. We'll analyze Nifty and Bank Nifty futures today. Today, we are not going to look at the market profile charts. There is some problem with my charts, my software. So I need to fix it before the market opens. So we'll rely mostly on candlestick charts today. So this is a daily chart of Nifty. You can see that for the past 2 days we have been kind of making red bars. That is the close is negative, and also we see that we see that the volume is yesterday. That is on pre-RBI day, the volume was highest, and then there was not much volume on the day after. So, and also we see that we have been one time framing until before that, until before the kind of pre-RBI day, and we have been continuously over the intraday. We look at intraday charts as well. So we have been I see a kind of slowdown. SGX is trading at around 370 to 80 levels. So basically on the weekend, before the weekend, I expected some kind of a good gap because of the China Taiwan issue, but it seems China has not yet made up its mind. So we may see some kind of fear built into the. In terms of options, we see that puts are being written. They are being bought as well by large players. However, today, if we break this kind of small channel, if we break this channel, this low, that is, if we break around the 200 to 37 levels, remember that level 17 to 37. If we break those levels, and if we break this small kind of single prints in terms of market profile. So basically, if we break 17,200, we are going to see a nice kind of traction between this, one time framing zone. So basically, whatever trend we have seen, and also you see that the trend has been there without rising volume. So the trend was not without rising volume, in the sense it was not falling volume at least. So this is the kind of thing you need to keep in mind. So probably we need to settle somewhere in between for the next expiry week. There can be a decent fall until 16,800 as well, if we do not go 17,800 sooner. 863 to be frank. We need to kind of touch around 17,863 or 870 levels. Otherwise, we can see some kind of nice traction on the downside. So do not become too long, especially be very careful with your position sizes, because generally what happens is retailers tend to, kind of increase their positions at these levels. So whenever you are increasing position sizes at these levels, the market will throw you out, because you are totally leveraged. So you see that kind of whenever the market peaks, there can be kind of drastic falls, and you do not want to be stuck with the kind of positions that you do not want to. So ultimately, whatever your trading style is, maintain your position size. That is very, very important. I'll keep reminding this every day, because at highs, so basically you see that we are not able to move above or below a channel for the past 5 days. So the entire week last, though it looked like a bullish thing, you see that pass a time between small rectangles. So any break below this or above this can only bring a good move. Otherwise, here you will end up losing money in options. So control your positions. That is very, very important. That's what for Nifty is. We'll look at intraday charts in a bit. Let's look at Bank Nifty. So in Bank Nifty, the situation is similar. You see that again, the trend was not that fast. It was like, on a curvature. So, and you see that we are in a broad range here. So any break below 37,229, this level is going to bring a lot of traction. Kind of we have gone up a lot since the past few weeks. However, now, kind of, if we break this kind of low, we are going to look some move on the downside. Another thing to remember in Bank Nifty is on Saturday, SBI results came and they were pretty mixed. We do not see some kind of big negative as well. However, because SBI went up a lot, we'll look at SBI chart once after this, so that to understand Bank Nifty better. So in Bank Nifty, we have to, kind of stay above this level. Otherwise, kind of we can see a decent fall below this level. So again, on the upside, we need to break 37 to 72. Remember that, and 38 272, and then 38 185 or 187 is also very important on the upside. So there is an inverted hammer. So today we need to at least kind of open above this body. Otherwise, there can be a decent fall, and any fall below 37 to 29 can bring to decent down levels. So let's look at SBI once before we'll look at some key stocks, SBI. And so, and then see that kind of already SBI is indicating a kind of negativity. You see how we are on the edge basically. So, and this is a kind of bearish pattern. So we may kind of open somewhere around 510 levels and then fall towards 480. However, if we open and sustain above 550, then only we can take the upside. Otherwise, it is going to be down. And also you see that in this entire in this entire run for the past 6 to 7 days, the volume has been rising. So this shows that the volume could not move the price. This means it is negative. There could be a slight gap down also. However, if the markets are to be controlled, because global markets are very stable, because they are not yet making their mind on China Taiwan issue, as well as re-emerging risk in Russia Ukraine also, because Putin indicated that he might attack some nuclear plants. So that is not a biggie, because these people are these people are becoming paper tigers. However, like we have seen with Russia Ukraine, anything can happen. They might make up their mind, and their geopolitical risk can come back. So what will make you survive in these kinds of markets? It is only smaller position sizing. Whatever is your capital, put some rules, play small positions, don't be greedy, because when riskier times come, the moment you become greedy, the moment you will start making mistakes, and they will take away your emotional capital. You will not be able to focus on your core trading. So basically, you see that in SBI, we have to, if we open below 525, there can be a decent traction in this level. So basically, we can see a bar like this, or down. If at all we have to open higher, we have to, break this gap. So any open above 540 or 550 is important for SBI. Otherwise, it will not survive. Now, let's look at some other major stocks. Let's look at Reliance first. Or let's look at banking. Let's get away with banking, so that we can finish off Bank Nifty. So in Bank Nifty as well, you can see that there is a lot of indecision. However, in HDFC Bank, you see that the volume has been falling. So this is natural. There is nothing big to decipher, because the volume is kind of haphazard. You are not getting a good price. But in SBI, yes, there can be a kind of drag on the downside. Now, let's look at Reliance, or let's look at Axis Bank. Same thing, everything is rangy. Let's look at Kotak. Same, Kotak is a bit down. So basically, any move below 1820 can be very bad for Kotak. So that is Kotak. Let's look at Reliance. That is very important. So, Reliance, you see that Reliance is taking kind of moving down, and another down if not on above 27. you can see some kind of downside below this. So again, we can see 2400 levels if the market comes to the downside. And also you see that, kind of we are near this big handle. So any move below can be really be brutal. Now, what is the topic of the day? Basically, I want to reiterate the concept of position sizing. So basically, if whatever is your conviction, for example, even if you can predict with 100% chance that today there can be a gap down, you should not commit your maximum capital to a particular trade. You need to set rules. Suppose if this is your capital, you need to allocate from the top down approach. Basically, you need to say, like, this I want to use for investing, this for trading. Within this, I want to use only this for intraday trading, this for positional trading. So within intraday, again, like that, but what happens most of the time is most of the retailers, they are not able to get more capital, large capital. So in that cases, you have to lower your expectations. Do not expect to make big bucks with small capital. It is impossible. It is next to impossible, especially in a situation like a stock market. So that's all for today, guys. Hope today's edition is useful. Sorry, it has been a bit short because my charting software is not working. These are Monday blues. However, I'll get it fixed today and will be up and running with market profile charts tomorrow. Okay, so that's all for today, guys. Have a great day. Trade safe and be well. Please subscribe to my channel and also give the channel link to your friends so that they too can learn new things in trading. And also please like as well as comment in the feedback section. Have a great day. Bye bye.